This episode of the Old Dogs REI Network is brought to you by Mino Studio. Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Hello, old dogs, and welcome to
Fun Facts Friday.
This is our once-a-week, only on Friday show, where we have special episodes not featuring guests, where I will share tricks, tips, terminology, and techniques that will help skyrocket you to real estate investing success. Today's topic is Top 11 Real Estate Investing Markets for 2021. Hey, but before I get started here, I just want to touch base with all you guys, old dogs and young pups that are listening. This is a great year. We're gonna do great. Now, don't be discouraged by all the craziness that's going on out there in the political sphere and all these other places, but look at the market, guys. There are some great opportunities, and there's going to be even more. So, man, I just want to encourage you, don't give up. Hey, and if you're thinking, oh man, I ran out of money, I can't really do this, you can get money. It's easy. We've got some great podcasts on it. I'm going to do some up ahead too. But if you run out of money or don't even have enough to get started with, don't fret. Hey, let's jump into the show. We got a lot of stuff to cover today. I'm going to do the tip of the week. Another great vocabulary word. We do terminology here, and from my friend Michael Lantrip's excellent book, The Language of the Deal. It's the term clear title. But before we start, I want to just give you a quick little story here. When we lived in Haiti, we were always looking for a good place to build a village for called the Lighthouse. That's our name in French. It's Maison de Lumière, or House of Light. And we were looking for a land that could accommodate the kids and would be perfect for what we were looking for. And we wanted to make it a self-sustaining community where we can tap into solar and we can do all these things that would cost very little to support. And we found this perfect piece of land, and it was located up in this area up in the mountains of Haiti called Kenskoff. It was about 3 acres, and it was just beautiful. Well, we found the owners. The owners wanted to sell. I'm cutting a long story short here, but they wanted to sell. We put down some earnest money, and we were ready to move forward on it. And all of a sudden, this old guy out of nowhere shows up and says, I really own this land. Now, we are dealing with the owners who happen to be in the States for this particular property, and they were saying, we don't know anything about this guy. Anyway, he had some written agreement. It was like on goat skin or something from, I don't know how long back, but it basically said it was his land. He didn't live on it. He didn't farm on it. It's great farmland, and didn't farm on it, didn't have his goats on it or anything. And so anyway, we got tied up in the courts in Haiti because we couldn't prove title. And that's really the focus of this thing here. The only way you can get out of it is if you bribe the judge, the local judge, or you settle with this guy with cash on the end. And we didn't want to do either of those things. So we lost this great piece of land. But nonetheless, it's still our dream to build that village up there, and we will one day. But that's the thing with title. At least we have title insurance here. So but you got to understand, there is really no such thing as clear title. And don't be fooled into thinking there is. In the United States, with the early land grants, the promoters, the crooked politicians, the illiterate population, and even honest mistakes, every parcel of land has some cloud on the title for the past 240 years. What we usually deal with is what is called insurable title. This means that the title insurance company has searched the public records for all the documents that affect the title of the property. And they have concluded that although they cannot show that title is clear, they believe that the items that might affect the ownership of the property held by the seller are so unlikely to come up that they're willing to pay the buyer for any loss he or she may suffer as a result of such an event. Title is not clear. It can never be clear, but it is insurable. That's really the best we can do. So that's it on clear title, guys. Good write-up, Michael. Thank you for that. All right, well, we're going to jump into our topic here and the top 11 real estate investing markets for 2021. Now, if you're looking to invest in real estate, finding the right location will make or break your investment. It really will. Keep listening to this podcast. I think it's going to be really good for those that are just starting and for those that are looking for new markets, or maybe you've invested locally, can't do it anymore, you're looking to invest out of state. So first off, how do you determine if a city is worth investing in? Now, we incorporated these following factors. They're helpful sort of rules of thumb to determine whether a city is worth investing. You do have to dig a lot deeper, but these are some of the key questions you have to ask yourself. Has there been an increase in well-paying jobs from business-friendly policies? Is there significant population growth? Are there housing inventory shortages? Is it tax-friendly? Is there a low cost of living and high quality of life? Is it a landlord-friendly area? Now, an influx of well-paying jobs and companies is that's a key sign. It indicates business-friendly policies. And this makes it easier for your tenants to afford their rent. Higher income people also tend to respect the property too. Higher inventory shortages cause a steady rise in home values. States with inventory shortages will allow your investments to appreciate in value. Tax-friendly states are also a must. They help you avoid getting large chunks of your cash flow eaten up each month. Low taxes attract high-income workers. It makes paying expenses like rent, for example, that much easier. Looking at some of the other areas, lower cost of living is another key factor. Affordable states tend to have growing populations, unlike New York or California. This makes it easier for tenants to make their rent payments. Low cost of living will make investments more affordable in the beginning. Making your mortgage will be easier. Higher living standards also means their money goes further. People with decent living standards are more likely to stay in one place. This increases the profit and lifetime value of each tenant. People in these situations will also be less maintenance. People in low quality of life places care less about their landlord's property. Every state has areas that easily cash flow on paper. The problem is, in these areas, it can be less desirable with tenants that don't care about their properties. Smart landlords avoid this when it's possible. Looking at these factors and others, I also look at various other expert surveys. The Forbes annual report, there are other lists that come out every year that rate the top investment markets. But one of the top resources is the annual report by the Urban Land Institute called the Emerging Trends in Real Estate Report, showing where the top real estate institutions in the U.S. are going to focus in 2021. The Emerging Trends in Real Estate Report is a massive document that's over 100 pages long. There's lots of information to wade through each year, and this year especially, they cover everything related to the economic shutdowns as a result of COVID that we've seen in 2020 and its impact on the real estate market. The best part of the report to me is the markets to watch section. They survey ULI members, and members consist of, companies like Marcus Millichap and others that have huge research departments that really have a good idea of where things are moving. Some of the most, I'd say, probably the most prominent real estate, not only just a brokerage, but real estate investment, leading firms in the country that are dealing in real estate, and they all focus in on 80 key geographic markets across the U.S. They rank these 80 major metro markets as to where they believe rents and values in these markets are going to go as a result. So keep in mind, I'm mixing this report with a lot of other general housing data, other surveys and reports that would reflect, now I would say the ULI report is very heavily on the commercial side, apartments, apartment buildings and so forth, but I've also mixed in single family, small multis, and then we get into large apartments and some of the commercial stuff. All right, well, let's get started. I'm going to start with number 11 first, Atlanta, Georgia. Now, Atlanta is also one of the best places to invest in real estate. It was one of the first cities I went to when I bought one of my first properties. It offers attractive buying prospects for all kinds of savvy real estate investors. And I bought back in 2014. So, the fact that it's still strong says something for sort of the longevity of Atlanta. The city's population has grown by over 14% in the last decade. This increasing population is driven by the housing demand. Atlanta has shown promising population growth and employment, which are two signs of a healthy, emerging real estate market. Atlanta is Georgia's capital and economic center. It is considered to be one of the 10 most productive states that contribute to the USA's GDP annually. That says something. As the city continues to go through an economic boom, prices of properties in Atlanta are forecasted to increase in the following years. People will want to beat out the competition and purchase soon if they're looking to develop a successful career, surrounded by a diverse community, especially for today's youth. Number 10, Birmingham, Alabama. Now, Birmingham ranks as on our list as one of the best places to invest in rental real estate in 2021. The Birmingham, Alabama real estate market continues to take steps in the right direction. Single-family rental homes are the single most important housing type in Birmingham, accounting for about 60% of the city's housing units. Property appreciation rates are so strong in Birmingham that despite a nationwide downturn in the housing market, Birmingham has continued to appreciate much faster than most other top-performing real estate markets in the U.S. There has been a distinct trend of people moving to the largest metropolitan area in the region to find the greatest opportunities. The Birmingham area is home to more than 1.2 million people. LendingTree ranked the Birmingham area as one of the least competitive real estate markets in the country. There were more potential buyers than sellers, forcing many would-be homeowners to rent instead. Let's go to number 9, Tampa, Florida. Tampa is also on the list of best places to invest in real estate 2021. With a population of more than 4 million, Tampa, Florida is not only an attractive metropolitan area, but is also one of the most frequently visited tourist destinations. There are several economic and development prospects attached to this market, and Tampa was described as one of the hottest real estate markets in the U.S. in the past year. There's a tremendous amount of pent-up demand for entry-level single-family homes in Tampa. The median home value is $251,287, according to Zillow. The Tampa housing market is growing steadily. Prices are still low, and properties have a good chance of a strong appreciation in the coming years. Home values have gone up 5.3% over the past year. There is less than 2 months of available inventory in the entire Tampa metro area, down almost 21.4% over last year. This is one of the key factors in rising prices. The benchmark for a balanced market favoring neither buyer nor seller is 5.5 months of inventory. Anything lower than 5.5 months of inventory is traditionally a seller's real estate market. Let's go to number 8, Orlando. Now, Orlando is a tourism and entertainment favorite because of it. As we all know, it's the home of Disney World and a lot of other places. But it was hit pretty hard by COVID. But this has still kept it as a strong real estate investment destination, especially once things open up and a lot of the tourism will be coming back into town. Investors have a choice of targeting the long-term residential or holiday markets with their properties. Both offer strong returns. While improving the Orlando real estate market and flourishing tourism are two of the most important reasons behind Orlando's economic stability, these two industries have a lot to gain from the successful economy. The expansion is related to the growing population and job opportunities in the city. This translates to more rental income and tourism, leading to a better economy for the entire city. Number 7, Nashville, Tennessee. Now, this is one we've talked about a lot and has been in the forefront for a while. I think Tennessee is the number one place that U-Haul ranked folks are moving in the United States. Most of them are coming from California. In fact, there's a city there, Franklin, Tennessee, that is referred to as Malibu East, which is really interesting. Anyway, taking the number 7 spot on the list this year, Nashville, Tennessee, the Tennessee capital, ranked 7th among all major metros, especially by recommendations for multifamily properties. 3rd among all major metros and by recommendations for office properties as well. It also took 3rd place on the ULI list among all markets for investor demand overall, similar to other cities on the list. Nashville is expected to see a 1.1% annual population growth over the next 5 years, ahead of the 0.7 national average. Now, I bet that number is going to be beat. And the cost of doing business in the city is 4.1% below the national average as well. Rent as a percentage of household income was also just 19.3% in this market compared to an average of 29.5% at the national level. That's a real strong sign too. That also gives opportunities to increase rents. Number 6, Huntsville, Alabama. Huntsville is ranked number 1 on this year's top 10 emerging multifamily markets list compiled by the Multi-Housing News. In recent years, Huntsville has reported robust multifamily fundamentals thanks to its diversified economy attracting a highly skilled workforce. In fact, its population rose 13% between the 2010 census and the July 2019 census, according to estimates, a rate far higher than any other metro in Alabama. As a result, pre-pandemic estimates anticipated Huntsville becoming the state's largest city within this decade. It remains to be seen how these trends have been affected by the current crisis, but one thing is clear: Huntsville's occupancy rates outperformed the national average by more than 200 basis points, standing at 96.8% in September 2020. With positive demographic trends also came an increase in development activity over the past 2 years. Developers completed more than 1,100 units between 2018 and 2019, 44.8% more than during the previous 2 years. And while deliveries year to date through September were rather low, with only 274 units, the same cannot be said about transaction activity. The per-unit price for deals closed in 2020 through September rose 95% compared to the similar period of the previous year, while the total sales volume increased more than 3 times to $293.3 million. Number 5, Dallas, Texas. Coming in at number 5 is the Dallas-Fort Worth Metro. Now, we've talked a lot about this, and this has been a booming area for a long time. The DFW is part of what's called the Super Sunbelt market category, which includes cities like Atlanta, Phoenix, San Antonio, Houston, and Tampa, which are all among the top 10 fastest growing cities in the U.S. as companies continue to flock to these areas for their business friendliness, access to talent, and low cost of living for their employees. The Super Sunbelt markets are expected to generate 28% of the country's new jobs between 2019 and 2025, even though only 16% of the country's top population currently resides in these areas. Dallas-Fort Worth also ranks high in investor demand. Local public and private investment availability of debt and equity capital, and the health of the local economy overall. And even with 7% higher median home price than the national average, Dallas-Fort Worth is still expected to see positive net migration of over 91,000 people over the next 5 years, which represents a 1.4 increase in annual population versus the 0.7 national average. And on top of that, renters are still only spending just 17.7% of their household income on rent, indicating that Dallas-Fort Worth Metro offers higher salaries relative to the cost of housing for the majority of its residents. Number 4, Boise, Idaho. Boise has a record of being one of the best long-term real estate investments in the U.S. The supply and demand dynamics continue to drive prices up in Boise. The Boise housing market has ranked as the number 1 in the U.S. by Realtor.com's Metro Level Housing Forecast for the year 2020. Their main criteria was based on the combined yearly percentage growth in both home sales, 0.3%, and prices, 8.1%, expected in 2020 among top 100 largest markets in the country. Home prices are soaring and breaking records despite the coronavirus pandemic. Persistently tight inventory in the entire Boise metro housing area, coupled with historically low 30-year fixed mortgage rates, are keeping the demand high, which in turn is pushing home prices up in this region. The real estate appreciation in Boise in the last quarter was around 2.44%, which equates to an annual appreciation rate of roughly 10%. For sellers, a nice profit is on the horizon. Nearby areas like Meridian and Nampa are also experiencing significant growth and are poised to be the next hot areas. Number 3, Austin, Texas. Austin, Texas ranks at number 3 on our list. The ULI report that I referenced earlier ranked number 1 in investor demand, number 4 in development and redevelopment opportunities, and number 4 across all markets in buy recommendations for industrial, multifamily, and office properties. The Texas state capital was also projected to see a whopping 2.1% annual population growth over the next 5 years, which was the highest of any metro by far, with only Boise, Idaho coming anywhere close to the 1%, and projections for other high positive net migration cities like San Antonio, Phoenix, Orlando, Houston, Dallas, and Charlotte are only hovering at around 1.3% to 1.5% per year. Austin was also projected to see huge job growth at a clip of 3.2% per year. Number 2, speaking of Charlotte, North Carolina. The median home price in Charlotte in 2020 was $280,000, which represents around 7% less than the national median price of homes at $300,000. Renters in the Charlotte metro spend only 13.5% of their incomes on rent, which gives real estate investors opportunities to buy older multifamily product, renovate these products, and charge rental premiums on those renovations while still keeping costs low enough for renters comparative to salaries in the market. According to the data, Charlotte has also expected to see 1.3% annual population growth through 2026, which is almost double the national average of 0.7. Job growth in the market is expected to grow at 3.6% per year compared to the national average of just 2.2% on an annual basis. And here we go. Drum roll, please. Number 1, Raleigh-Durham, North Carolina. The Raleigh-Durham area of North Carolina ranked number 1 on our list, especially in development and redevelopment opportunities. In the ULI report, it ranked number 1 in multifamily and industrial, and number 2 by recommendations for office properties as well. The Raleigh-Durham Metro also came in at number 3 in the local economy list in the ULI report. And speaking of job growth, Raleigh-Durham ranked third among all markets in 5-year projected employment growth at 3.7% per year. Raleigh-Durham residents who rent their living spaces are also spending only 15.1% of their incomes on rent. This gives multifamily investors room to increase rents and with buying and renovating apartment properties while still keeping housing costs well within reason for most renters, even with renovation premiums being big debt. So that is it. Some great cities there for you guys to invest. I also say, hey, if these are the hot cities, why not look at those secondary and tertiary markets that feed these cities too? Like I talked about Boise, Meridian, and Nampa. I mean, there are other Meridians and Nampas in places like Raleigh-Durham and other places too that aren't right smack in the middle of the city, but nearby. Especially now with COVID and a lot of people going virtual, people want to live near sort of the center of where the businesses are, but they don't necessarily have to go into those businesses now. So they're looking for good suburb rental areas, whether it be single-family homes or apartments. Well, that's it for today. Please note, Old Dog listeners, everything presented here can be accessed in our show notes on the Old Dogs website at olddogsreinetwork.com/blog. And look for the episode entitled Top 11 Real Estate Investing Markets for 2021. So until next time, remember, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.